Welcome back. Straight off, let's go to Deven Choksey, Managing Director of Choksey Securities. Deven, good morning. Thank you for joining us. Deven, now that all the high-profile events are over, what's next for Indian markets?
Good morning, Nikunj. Well, I think after the events are over, probably you are going to be seeing more of expectations driving the markets. And what are those expectations I think that we are looking at? I think few of them basically, if I have to put it across. The first one would be all eyes would be on how SBI first reduces the rate of interest on select loans, and followed by which if RBI is also raising reducing the rate of interest, I think in subsequent period of time. So how exactly I think the interest rate reduction taking place, which would probably determine the future mood of the market. The second thing which is more on expected lines is that the fuel oil prices are going to be increased, and that is where probably you are going to be seeing the larger amount of confidence coming back.
You were talking about the fundamental parameters that the market is working with.
Yes, Aisha, good morning. Well, yes, I think one is the possibility of interest rate reduction, and that would have an impact on to the infrastructure projects in the country, and that will bring basically I think more amount of confidence back into the minds of investors. That is the first point that I find I think is likely to go positive. The second point, which is also in line with that positive direction, would be the rise into the fuel oil prices, and that could have the positive impact once again on the government's borrowing. At the same time, I think it would translate into the lower interest rate going forward in subsequent part of FY12 and 13 as well. So from a point of view of looking at the market, one would find that lower interest cost and the I think possibility of I think more projects getting into the start mode, which would mean that I think higher amount of disposable surplus in hands of people, and ultimately entire economic equation should start working well. On that basis, probably the market is moving I think reasonably confident, and it is offering lot of resilience at the lower levels. That gives me the confidence that I think those funds which are basically operating in the market, they may be rotating sectors, they may be rotating stocks on a time to time basis, but certainly I think they are here to stay in for a longer period of time. And we would probably see, I think the market probably consolidating in around 5200, 5350 levels, and after that I think probably it may try and inch above 5550, 5600 levels, somewhere closer to the mid of April or by end of April, when the results also would have started and the credit policy also would have probably factored in.
Deven, when we started the year, the top trade on the street was sell consumption, sell FMCG, sell defensives, and buy rate sensitives. But what do you make of price action in some of these consumption stocks? Titan, Jubilant, VIP. These stocks were up 50% in the year 2011, and now all of them are up about 25 to 30% in this calendar year.
Nikunj, the names which you have mentioned, I think if you recollect in 2011, I think most of these companies have been quoting at a very fancy and a premium valuation, as I would call it, and they are not sustainable going forward, as well as we all know. I think for a period of time, I think it's sustained. That doesn't mean that I think it should get the continuity of that premium valuation going forward. To my mind, I think immediately when people started seeing the rate sensitive stocks, particularly banks, becoming very attractive and the growth momentum coming back into the economy, automatically I think the portfolio shift started taking place from some of the premium valuation stock and getting back into some of the low valuation stock. Call it I think a strategy to drive the high level of alpha in the portfolio, and picking up those stocks which could possibly give 25 to 30% kind of a return in this year, something which consumption stock gave in the last year. So obviously I think it's a rotation of portfolio has also taken place along with profit booking in some of the premium valued stocks of the last year.
Deven, would you agree with Ashwani's assessment that real estate is now coming again and again, and it's too early to write an obituary for real estate? All those who wrote an obituary for ADAG stocks in the month of December, they're repenting because most of the ADAG stocks are up 100% this year.
Yeah, Nikunj, I think if you look at, I think the valuations at which some of the real estate companies are quoting, they are quoting below their book values, irrespective of, I think, whether they will fetch the market-driven prices of the property that they have, they're quoting below their book values. So from a perspective of, I think, getting this particular equation, I think, getting a little bit, I think, rated properly, I would agree that yes, there should be, I think, an upside possibility in the real estate stocks. Also look at how the market is operating. I think today the ETFs are basically creating the baskets of stocks which are undervalued stroke, I think, available at a discounted valuation, they would probably, I think, create a basket of those stocks and they would start, I think, putting money into those companies. So now it is turn of real estate because they've been neglected. Obviously, I think you put some amount of money there and I think automatically the returns start shooting up for them. According to me, I think this game is largely played on the valuation at this point of time. Since the market is offering in different pockets, I think the valuation advantage, you are going to be seeing this kind of a phenomena continuing, wherein I think on a rotational basis, different sectors and different stocks would become, I think, the story of the day as far as I think the market is concerned. And if it is that, then probably real estate has done it yesterday, may continue for some more time. But I think it is largely driven by the valuation advantage that someone saw in some of these companies.
Deven, I want to get you in on Tata Motors since you track this one carefully. How concerned, or rather how alarming, are the concerns about China actually slashing luxury car prices for Tata Motors?
Well, I would think that on one side, I think we have to look at whether the volume is going to grow, and on the other side, I think if the prices are going to come down, and that would hit the margins for the companies. As we see the global market pattern, I think some of the German car manufacturers have already started, I think, the price slashing. However, I think this is not seen across the board in all the markets, and probably you are seeing in some pockets, I think, the price slash coming in from some of the manufacturers. To my mind, I think Tata Motors and JLR is adopting a right strategy. They are getting localized in China. So to a greater extent, I think that should help them in building up on the volume, at the same time I think with the competitive price pressure, which is the right strategy. According to me, I'm not too much worried in the near term. I think though I may be slightly careful about this aspect. If China goes on some amount of slowdown, then in that case I think some volume drop may happen, because JLR offers I think around 17% contribution from China as far as I think the Tata Motors is concerned. So from that point of view, if you look at it, I think there may be some amount of carefulness to be exercised. Of course, I believe that in the American territory, I think since the better recovery has taken place, the portfolio of JLR is right now growing well and probably with a decent margin. So I think if China's loss could be probably compensated by America's growth in this kind of a situation, as I would see it. I'm not too much worried in the near term, but I would stay careful about this particular situation which is right now on roll at this point of time.
Even at a time when you're advising your clients to be stock specific, where are you picking your spots? Where are you advising your clients to allocate disproportionate amount of money?
Again, Nikunj, I think it is largely, I think, on a value basis, so individual stocks would come into play. We like currently the companies like Jain Irrigation, which is, I think, into the game changer move plan from the next quarter onwards, wherein I think they would have started their business of sales, I think, coming through the NBFC business, through the NBFC, because of entire sales would get transferred after 90 days to the NBFC. So that is one going to be a game changer plan for company like Jain Irrigation. Second thing, I think we like infrastructure plays, so we pick up, I think, a port company which is Adani Port. Once again, I think we go by the higher amount of ROE rational and in this particular company, wherein I think you have got a sizably good amount of activity happening, and the current port and the expansion is taking place at the rate of 35 to 40% on a year-on-year basis. So we like that company. Similar way, I think we also like, I think, companies like KPIT Equipments, which just went, I think, exposed currently, which is, I think, on the verge of giving some major news on the front of, I think, Revelo product, which is likely to find a couple of OEMs, I think, to buy this particular product from them. So we certainly like some of the mid-sized companies, even companies like Starlight Technology, which is sitting on a large amount of orders coming for power grid as well, I think, on the UMTP side.
You were making the point as to what are the sectors and stocks that you like in the current market.
Yeah, actually I almost ran through, I think, the list of the stocks which I wanted to talk, but I think the one which is looking a little bit more convincing and interesting is the beneficiary of the power grid's large order which are likely to come up in this particular financial year 12-13, and that is where we like companies like Starlight Technology, which is likely to get benefited with the high end of the aluminum conductor business from the order that gets released on the transmission lines. And of course, I think their focus and foray now into the ultra mega transmission line tower projects, I think that is where I think they are likely to be more successful going forward. So we like companies like Starlight Technology, or even for that matter I was mentioning earlier KPIT Equipments. Some of the infrastructure finance companies looks, I think, quite convincingly placed currently in a falling interest rate prospects, the companies like REC and IDFC, both of them are looking very interestingly placed on the valuation as well. At the same time, I think on a prospects of fall in the interest rate. So you have a list of stocks which are looking quite attractive from an investment point of view for around 25 to 30% average return on each of the companies which I talked about in about 12 to 18 months time from now.
So Deven, out of the 6 stocks you've just mentioned and we've discussed, where are you personally invested and where is your family money invested?
The Adani Port and Jain Irrigation, these 2 companies basically where I have invested my personal money, and that may be a qualified statement as well.
Do you expect Adani and Jain Irrigation to appreciate by 50% in next 2 years?
Certainly, I think that should be the target for these 2 companies, at least I think for 50% plus appreciation over 2 years time.